Hello fellow traders, tonight's going to get interesting. I'm going to go over 3 different charts with you, and I'm going to show you why this is not the bottom. I am very confident enough where I bought more FAS under 6 today. I brought my average down to 690. I'm holding a good chunk of FAS. I didn't add to my SRS. And I'm loaded with puts, as you know. What I want to go over today is some chart formations. I'm going to start off tonight with a couple things I read. I want to just lay them out there. They're back page stuff. Like if the internet wasn't here and you got the newspaper, front page is all the fluff, 3 pages, 4 pages back, in the bottom corner, little article, this is where you're reading this stuff. Last 12 months, all home transactions, I'm going to make this quick, 20% were foreclosures. The other 15% were short sales, which means they sold less than what was owed to the bank. That's 35% of all transactions on homes in the last 12 months were bunk. Number 2, 22% of all homes right now in the United States, homes and condos owned, are underwater, have negative equity. 22%. In October of 2008, that was 14%. In January, 17%. Now it's 22%. And they predict homes are going to keep falling in price through 2010. If they fell 5% more right now, it would just unleash a whole nother percentage of who has negative equity in their homes now. Just wanted to go over that real quick. Things are definitely not looking better. I'm not a doomsayer saying the sun's going to explode, but this is not the bottom by any means, okay? Remember what they're doing right now. You're at the top of a trend. You never want to get scared out of your shorts at the top of a trend. Just like down at the bottom in March. That's not when you want to throw in the towel and sell your stock. Remember, that's their job. That's what they're doing. This is the 2001 to 2003 crash, okay? I want to go over something. October low, November low, March low. See that? If you want to call those our crash now. But my point is see how every time you made a lower low, you never had a rebound. And if the March low held the November low, okay, I'd say, all right, we're going to 10,000, come back base at 9,000, and the things they're doing are working. But they would their policies would have to be completely different. They would have had to let more banks fail, homeowners fail. They would have been going a different route, okay, for me to believe that. But let's just say this 2000 crash, it wasn't until they held their previous low that we had our rebound, okay? And it's real important that we follow that, because we had a massive lower low, and that's what we got to follow, okay? I'm going to jump back to the 29 crash now. They say we're at like a 2-year in the bear market. I say a year, which I'm going to go over, but they say it started in July 07. So I pulled up a 2-year chart from when the crash started in 29. We had 3 50% plunges, 400 to 200, 300 to 400 to 200. Then there was our 50% run back to 300, then 300 to 150 right here. Then we had another 50% run, okay, 150 to like 220, and then from this we'll call it 200 now to 100, so another 50% decline. Then from 100, which actually hit like 82, to like 175, which was another 50% run. So this is kind of what we're having right now, okay? And you can't think it's over, because look at that lower low. This is like our November low and then our March low. See that? And it looked like it was coming up a 50% run again. I've done this before. You know what's going to happen here when I slide this out a little more? Okay? Exactly. Look at that. Another 50% fall and then a 75% fall. And I want to point this out. It wasn't until we held the previous low. So even if this is real and they're going to float this economy out of it, we're going to have to backtrack from this, 8,500, 9,000 back to 7,500 and then hold even 700 and hold that 6,500 low, or that 7,000, I mean. We got to hold that low. Real important. Now I'm going to present day. See what I'm saying here? Boom, 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 and then boom. So there's no way. See how we could reach this 9,000 at the 50. I think that's too easy, though. Everybody dump at the 200 day. I think they're going to leave people hanging, and I'll tell you why. And I need to wrap this up. Look at this trend line I'm going to draw. It's a new trend line. Why I like it? Because it's the last time we dinked the 200. Instead of going off these peaks right here, I followed the downtrend right there. See those 3 peaks? And then touched the opening of our first plunge. I mean, that was our good plunge that led us into this October low right there. Right off of that top, points right to today. And I got one more I like. The October base. Right off of our top right here that we couldn't get back to before our plunge, points right to today too. So even if this is it, you got to look for the pullback to here. Guaranteed. And then a steady climb. But I think we're going lower for sure. So don't let them get you nervous up here. I got a lot of fellow traders right now. They're confused. I like that. They're ready to, as one of our fellow traders said, tap out. They were ready to tap out at the bottom too. I recall the night I was at his house for a party and he said, "Oh God, what's going to make this market go up? It's over. We're going to do the 2-year slide." And I looked at him and said, "Now I know the market's going up from here." And it's went up every day since then. And that's what I feel's happening right now. So stick to your guns. We had a lower low. We didn't hold those November lows. Good luck.